Well, that is the president outlining some of the key highlights and the achievements of the Modi government over the last 9-year tenure. And of course, talking about some of the major pillars of government policy, including Atmanirbharta, the unified, diversified the economic policy, and looking at a stronger economy as well as equality across the economic strata. Well, with that, we have to quickly get to the market and also to our first corporate interview of the day. The market, by the way, is still sort of nursing some losses, down about 80 odd points. So it is flip-flopping around that the flat line, but the pressure is on. As you can see, we've again begun a bit of a decline. The Bank Nifty's turned negative as well. So we've got an eye on that. Mid-caps are doing much better. For a change today, the mid-cap index is actually holding out in positive territory. So that's the shape of the market. With that, let's actually get to our first corporate conversation on the show. Welspun India delivered a mixed bag in the third quarter. The revenue is actually down about 23% versus last year, and it's down 11% if you compare it to the last quarter. Demand worries continue, but the company has clocked an overall improvement in margins on a quarter-on-quarter or a sequential basis. Dipali Goenka, Chief Executive Officer and Joint Managing Director at Welspun India, joins in to give us some more color on the business. Dipali, great to have you with us. Thanks for joining in. So, I mean, if I only look at the headline numbers, and obviously there is pressure right from the top line itself, but you tell us, I think the reduction in input costs, that at least has helped your margin sequentially. But before we talk margins, let's talk headline. The revenue picture itself. How do you see the last quarter of the year and, more importantly, the beginning of next fiscal shaping up for you?
So I think, let me just give you a perspective. Definitely, the commodities have come down and they softened. The cotton prices last quarter were 83,000. Right, this quarter was 69. Going further, they'll soften further. The freight costs have considerably come down. So commodities are holding strong. However, our energy basket still continues to be a little bit dynamic. That is, again, a kind of an aberration there. And it's, again, a question of revenues. I must share that the wallet share is going to experience in travel for the consumer more so, that the home textile has dropped considerably from the wallet share by 20%. So it is, again, a question of the top line that we look at. But I think if I look at Welspun India, and definitely you spoke about the exports, but let's not forget our emerging businesses that have come to fore. So they are contributing around 19% to our whole top line, which is advanced textile, flooring, and our domestic consumer business. Our domestic consumer business grew, and we all know that India is the bright spot, with the kind of a growth, GDP growth of around 6.7%. So looking at all that, when I talk about the top line and then when I talk about the mix, which is going to be going forward, Welspun, if I talk about the US markets, Martha and Scott, which are our licensed brands, they increased our shelf space by 175%. And now our Disney license in UK and Europe is going to give us more avenues of growth in those doors. So overarchingly, our product portfolio basket, towel sheets, rugs, utility bedding, and our licensed brands will hold strong for the next year as well. Our emerging businesses will continue to grow, and our domestic retail business, owing to our Indian global position that we have, is going to stay strong. So Welspun and Spaces are going to be at 4. Welspun has grown by 50% and is the highest distributed brand in the country today.
Hi, Rima here. But just to talk a little bit more on your top line, revenue's down 23% year on year. Quarter on quarter, it's down 12%. Has the revenue bottomed out? Should we expect an improvement in Q4, led by the factors that you outlined, increasing shelf space, the Disney contribution, etc.? Give us an indication of the top line in Q4 as well as H1 of FY24.
So, I think we all know that as COVID struck us, the logistics was a nightmare. The retailers received their goods, a couple of quarters late. Even the holiday season didn't get the goods that they needed. Today as well, we see that, there's a glut of inventory. So while you're talking about the top line, it is going to be staggered. So as the inventory clears up at the point of sale, there might be a peak of kind of a demand that might come from certain retailers. And again, a trough, because then the inventory tends to mobilize. I think it's on the back of the footfalls that will get restored. And we feel that the latter half of the next year, half one, is where the footfalls will start getting restored. And then we'll see the top line coming to where we want it to be.
And where is it that you want the top line to be in H2 of FY24?
No, we are $1 billion in revenue, and we continue to hold that strong. And we have that vision of going towards $2 billion as WIL in 2026. So owing to that, we will be where we want to be.
All right. Hi, Dipali. Morning. This is Pavitra. Just a little bit on your capex. I think in the first 9 months of this year, you've spent around 240 crores on capex. So can you tell us, at a time when demand is perhaps, not looking so steady, do you think that you are going to scale back on capex, or perhaps not expand as much? Or do you think that plan is still in place, continuing into FY24 as well? And on that same note, what is the store addition plan like?
So, let me tell you one thing. We have done a capex. We're all behind it now. But flooring has done the capex of around 1,300 crores. You've had your advanced textile, the new the machine and factory in Hyderabad. All has been done. So the 240 crores is the last lag. The only thing I must add on, now we're investing in green energy. That is around 200 crores, and it will be operational by Q1 2024. So that is the only thing that we have going forward. And that is all to mitigate risk and to grow our business, sustainably. And also to share that our debt is considerably down, and we will see that home textile, the core business, debt coming down to zero by next year. And definitely that's where we are today.
Okay, got that, Dipali. We look forward to a longer chat, perhaps once the budget and the earnings season and the thick of the news season abates. Then we'll get into more details. But thank you for all the for the highlights from the results today. That's Welspun India for you. Stocks holding up about 1%. Need to take a quick break. On the other side, commodities with Manisha Gupta.